Hello, welcome to Traders Talk, and we are back live after a gap of a week. I hope everything is okay, as nothing much is happening in the market except seeing greens. Okay, all right, seeing greens, right? So when we see greens, things are good. All right, so welcome. This is Ming Hon, and you're on Traders Talk. And for those who have just joined, welcome. Please. Give me a thumbs up if things are okay with you and you're excited to trade in the market for this week. All right, so it has been a busy week for us, and I've been doing a bit of traveling, and of course, when you are traveling, then we find less time to actually do some trades because it's quite tiring to actually move around. Anyway, it's okay because we are quite light in terms of trading over the past weeks. And of course, we have also been taking off some of our winners, which we have actually shared with you guys over the past several weeks and months. And that is actually great to take off winners in the trade, right? Okay, yeah, of course, the market has actually been quite bullish for over several weeks or months, perhaps, and maybe let's see the charts right now, right? We'll go through a bit in terms of the charts to see where we are today. And where we are actually headed. Yeah, and of course, if you see the title for today's show, what is that? Sell in May and go away. Yeah, if you have been trading a bit, then of course this is actually one very common what is that common saying that you actually make your profits right till May, right, and basically sell your stocks and go for a holiday all the way up till October before you actually come back for the year-end rally. Yeah, and of course, it is somewhat okay right now to say this because the market is actually up about more than 17% for Nasdaq and almost 8% for S&P 500. Yeah. And if you have actually also profited during this run up of the market, then of course congratulations, and it's always good to actually uh, make money, right? Make money in a bull market. In a bull market. Yep. Let's see. Okay, let's put it smaller. All right, where did we leave you last week? Where did we leave you 2 weeks ago, right? I think when we left over, it was actually somewhere back. We did not have a session last week, and of course, it was somewhere on the 4th, right? 4th of April. 4th of April is actually somewhere around here. Okay, yep, we were actually somewhere around here when we left off, somewhere around here, right? It's here. Yep. We were actually somewhere around here, and of course, after that, the market actually continued to move up, breaking above all the levels which we have actually mentioned. Yeah, the 4,100 level, and subsequently, it is actually also broke, almost wanting to break now. The next level which we're actually watching is the 4,200 level, which is somewhere around here. Yep. So this level broken, yeah, you can actually see that we actually went up quite nicely. And of course, the CPI, which was actually released last week, right? CPI which was actually released somewhere around here on 12th of April, where we actually had this red candle here, right, retracement, but subsequently we continued another 3 days, 3 days up, including yesterday itself. Okay, so CPI came out. The CPI was actually 5%. The forecast was 5.1%, and of course, if you look at the inflation, right? We have actually came all the way down from, I think, the highs somewhere mid of last year, 9.1%, and right now we are actually at 5%. Last month we were at 6%, and of course the following month we will continue to actually see whether we will go further down or we will actually stay put around 5%. Anyway, what is actually coming up next is the Fed rate hike, right? Fed rate hike is actually expected on the 2nd or 3rd of May, if not mistaken. Let's see when is it expected. Okay, maybe we actually go to this tool, right? CME. Okay. I also wanted to share with you guys this CME Fed Watch tool. Okay, if you do not know this is basically the Federal Reserve rate expectation tool, which we actually also use to see what is the market consensus with regards to the rate hikes. Yeah, and today itself, we can actually see that the next Fed meeting is actually expected on 3rd of May, and the current consensus is actually about 85% that the rates will actually be hiked by 5.25 basis points. Yeah, and only about 14% it will actually stay put without a hike. Yeah, so likelihood we will actually continue a hike of 25 basis point at the next meeting. In fact, this rate, right, 85%, right, actually continue to actually came out, I think, since the last meeting, right? This rate was actually the rate was actually much lower. Yeah, but of course over time you can actually see that the percentage of the number grew. 1 month ago it was only about 20% expectation that there is actually 25 basis point hike, and there was actually a 54% expectation that the rate would actually stay put. Yeah, and of course over time these expectation also changed, and 1 week ago it was 72%, and 1 day ago it is actually 85%. In fact, I opened up earlier, it was actually 90%. So so now means now it actually came back down to about 85%. Anyway, 85% is more or less so-called confirm or likelihood that this would be the things which we are actually seeing at the coming 3rd of May. Yeah. So we also use this tool to actually gauge the market, basically to give a little context of where the market is actually going to go. Of course, if the rate hike is 50%, 50 basis points, then of course we would probably not see this kind of bullish momentum going up, right? And because it is actually a lower rate, then of course the market expects that to be the so-called last hike for the year. Yeah. So after 3rd of May, then this figure would actually go to the next FOMC meeting date, right? And you can actually see 14th of June. What is the expectation right now, right? What is the expectation as at 14th of June? Yeah, 14th of June is currently at 525, which means that there is going to be a pause after the current rate hike. And then if you actually come to December, then of course you can actually see that come December, right now the consensus is actually expectation to see that the rates will actually be cut here would be probably 50 basis point by December, and the rate would actually start to be cut here right in November meeting itself. Yeah, so the market expectation right now is that the the rate is expected to be cut relatively early, right onset from November itself. So this is actually the market consensus. But of course, during the time, when time passes, right, these percentages would actually change based on the events that actually happen throughout this period. Yep. So this is actually quite a cool tool for us to actually get some indication of rates. Yeah. Okay. So coming back to S&P, right? So where are we now? We are actually at 415, 4151. Yesterday itself, we can actually see that initially the market was actually down. I think was I think before I went to sleep yesterday itself, uh, the market was basically slightly coming down a bit, moving sideways, and then of course a lot of things happen while you sleep, right? So I closed some of my day trade position, took some profits out, but of course after that, the market actually rallied towards the end, and a lot of the I think the positions which I exited all went into profit. Yeah. So anyway, because I wanted to sleep, so I closed all my positions early. Yeah. Even though with smaller profit, it's still fine because you would not want to see that profits turn into losses, right? So it's okay. We have a new day to trade as always. Yeah. Okay. So yeah. So right now 4002 as the so-called resistance level, which we actually need to watch, and then on the bottom side, we would probably be watching the levels right here at somewhere around here 407, about 4070. Yeah, somewhere 4070 as the so-called next level of support. Yeah, next level of support for S&P. My personal expectation is that the earnings season has actually started with the banking stocks having made their announcement, and so far they have actually given a bit more push to the market since they have actually started the earnings. The first being JP Morgan, right? JP Morgan earnings was quite good. Yeah, and of course you can see that JP Morgan has gapped up almost about 10 over $10. Yes, $10 since making its announcement last Friday, if not mistaken. Yeah, last Friday. Was it Friday? Yeah, last Friday. Yeah. And of course, today itself, BAC just announced their earnings, and it's also positive. Yeah, BAC is actually also positive earnings. As you can see, it is actually above estimate, and you can see that BAC price pre-market is slightly up. Yeah. Goldman Sachs also made their announcement today or later, is it? Let me see. Goldman Sachs would be 18th. It should be pre-market if not mistaken. Let me see. Go earnings. Goldman Sachs here is not written. I think it is pre-market because I just thought I saw Goldman Sachs GS. Let me see on my mobile. Earnings today. Yeah. Okay. I think they have actually announced, but probably not good because I see the pre-market is actually down by about $10. Anyway, Goldman Sachs has actually done a big rally up from its lows of about 300. now trading at about 330, and of course probably the earnings is not too good. Actually haven't come out here, and it's actually trading right now about $10, $10 down. Yeah. So like I said, the banking sector has started to move the market up, and of course, if Goldman Sachs did not do quite as well as the JP Morgan or BAC, then of course that is another possibility that it will actually move the market the other way. Yeah, because it's quite important for this earnings seasons, right, to actually see and show that where basically all these corporates are actually going. Are they actually going into a shrinking mode? Yeah, because for the first quarter of the year, most of the stocks has actually gone up, right? If you look at the first quarter, which is 3 months, right? 3 months performance, right? You can actually see all the big boys, the prices like Microsoft, Apple, Google has actually gone up by 15 to 20%. Facebook has gone up by 60%. Tesla 50%. Amazon slightly up by 5%. Yeah. So a lot of corporates have actually move along with the market momentum up, right? But this round of corporate earnings, if the earnings are actually down, right? The earnings are actually down, and their expectation also shows that their earnings expectation would also be down, right? Then of course that's the time where we will actually see that the market having a bit of a bit of a pullback after this current rally. Yep. So that's why my expectation is that until that is actually proven or shown through most of the corporate earnings, right, then the market will actually move sideways a bit, and until then, yeah. And I think till next week, we will see a lot of the big corporates to make their announcement. Tesla is expected to make announcement this Wednesday, if not mistaken. Yeah, this Wednesday, if not mistaken. Yeah. So one thing I also wanted to share with you guys is that last week I was actually in China, and one thing which I saw during the visit, right, is that EV adoption in China is actually quite high. Yeah, quite high. That means the electric vehicle is actually quite high in China, with big cities basically almost 50% of their vehicles are actually now EV, EV, and the thing is that the market is actually filled with all the Chinese brands. Yeah, although Tesla is actually there, I think out of 10 cars which you see, probably you probably only see one Tesla or even less. Yeah. And the brands like Geely, BYD, NIO, and this Xpeng, right? Xpeng, and many other brands you would probably not heard of, and then these are mainly local Chinese brand, and the thing is that the outlook of the cars, the quality of the cars, the performance of the cars of the Chinese brands is actually not too bad. In fact, it is actually much better than those European brands, Tesla included, and also what is that? And also brands like BMW, Mercedes are actually far apart and way back, even compared to some of the smaller size EV companies. In fact, those brands, the European brands EV, is actually not really selling in the Chinese market. So if you are wanting to change an EV, and of course maybe a prestigious one, you would probably change to a Mercedes or a BMW. Think twice because nobody is actually buying them. And of course, the if we compare technology, right, technology on this EV, the Tesla is of course way ahead, even towards the Chinese brand, mainly on the technology behind how it operates, technology behind it's you call it AI, or how the map works and how it does the auto drive and all these kind of things. So Tesla is still leading ahead of that. But if you talk about just as a vehicle and if you want comfort and a bit of price and quality, then of course Chinese brand is not too bad. Yeah. The one which is selling in Malaysia, right? BYD, yeah, BYD. Okay, I've also got a chance to take a ride on that, and it's okay. I mean, it's nothing fancy. It's nothing fancy, but of course, in terms of price, Malaysia, I think, is probably selling about 160,000 ringgit, right? And in China, basically, that vehicle is actually just priced at the same value but different currency. Yeah, 160,000 renminbi. In fact, if you want to actually pay about 200 over 1,000, right, you can actually get quite nice and very posh kind of EV with what is that? Geely brands under Zeekr, ZEKR, and many other. Xpeng is also quite good. Neo is also actually quite good EV. Yeah. So as I said, Tesla earnings coming up. I mean, I'm not too sure where basically this would go. Yeah, whether it can actually continue to go up, or whether it will actually do some pullback, because for the current year, Tesla has actually moved up by quite a lot. So okay, that's some of my experience with regards to EV in the China market. Yeah. So companies like Neo, right? Neo is actually trading at now about 970 something. Yeah, as I understand from my friends, right? Neo is actually not making money. Yeah, not making money. So these are again speculative trades. Or if you actually want to do it, then of course I would say probably wait for you to do some pullback lower towards closer towards 8 for a trade entry. Yeah, yeah. Currently has actually moved up quite a lot. Okay. So let's go to Nasdaq. Okay. Is this Nasdaq? Yes. It's too many arrows. Okay, let's pull out the arrows. Okay. This was probably from the previous show I was commenting, right? Okay. So okay, Nasdaq so far basically again sideway pattern, taking a pause from this its run up. Yeah, taking a pause from its run up. Yeah, this was one, this was two. Yeah, this is one, this is two, and currently it is actually trading in range. Yep. So this is actually the range where it is actually trading right now. Yeah. So I would say this is actually about 13,002, and on the lower side is about 12,900. Yeah, 13,000 to 12,009. Okay, so this is the range, 13,000 to 12,009, and basically we would actually want to see whether it breaks out of this range right now. Yep. And of course, the earnings is one catalyst, which can actually make it go further above. way back to this level, which we will see probably see some resistance at 13,700. Yeah, 13,700. This is one level, and it breaks. Then the next level for us to see above is 13,007. Yeah. Okay, and of course on the bottom side, this 12,900, right? There would probably be some kind of support, some kind of strong support at this level. Yeah, because you can also see that right here, yeah, right here. Yeah, this was the previous resistance, and then of course you can see that now this level forms a support down here. Yeah. So if nothing bad happens to the Apples, to the Microsoft, to the Tesla, then of course the likelihood is for the Nasdaq to actually continue to go up, hitting this next level up. Yeah. But of course, if the earnings starts to show negative numbers or lower expectation, then of course we would be possibly pull back to the 12,000 level. Yep. So yeah, watch the price action, and of course right now I would tend to stay away from longer term trades, and mostly only doing some smaller day trades. Okay, yeah, and if you look at the prices of the stocks like Apple, right, you can see that a lot of it are actually topish. You can see, yeah, topish. Yeah, you can see that there would be some form of resistance, many resistance hit. Yeah, this level up. Yeah, same as Microsoft. Yeah. I mean, if you have read our newsletter, if you have followed us earlier, I mean, even some of these stocks, right? I mean, I have actually taken a breather out. That means I have actually sold off some of these stocks, Microsoft, Apple, Google. Yeah, and if you are still holding on, there is also, and if you are afraid that the price might retrace, then of course you can actually use options to actually protect your position. If you do not want to sell and realize a profit from this run up of 20%, right? Then of course you can actually do what we call a covered call. Yeah. Basically, a covered call is you having 100 shares of a stock. Yeah, and then at the current price, let's say this is Microsoft, right? Let's say current price Microsoft is 290. Then of course, if you're afraid that the price would retrace, then you can actually sell a call above the current price. For example, you can actually sell it at 295. Yeah, you can sell it at 295. Then of course, if the stock price move up to 295, then of course your profits for these 100 stocks is actually kept at 295. Yeah, but of course, if the stock comes down, then you will actually earn the premium from this call, and the premium from this call would actually protect some of the losses that you actually incur from the down move of the stock. Yeah, and of course you can continue to sell this call to continue to make actually weekly or monthly earnings, depending on the duration which you sell this call. You can continue to actually make these earnings. Yeah, and of course if you see that, let's say Microsoft is actually moving around here, then of course all the calls which you have actually sold probably from this date here, right? From this date here would end up out of money, and you would actually make the premium, right? For since maybe for the 2 weeks of April, you will probably get the full premium to as a so-called hedge for this 100 stocks here. Yep. Of course, the downside is if Microsoft hits way above, where did my stock price go? I press something. If Microsoft hits way above 295, if you sell a 295 call, right, then of course what will happen is that your stocks can be actually called away. That means you need to actually sell your stocks at a price of 295. Okay, let's go back again and see what happened to my chart. Okay, it's back. Okay, so it's good to have some options knowledge if you are actually investing in stocks, yeah, because some of it will actually come in handy to like the cover call strategy which I've actually shared with you just now. Some of it will actually come in handy during certain times like this, like just now on the Microsoft, right? We should mention Microsoft, yeah. Certain times like this, you can actually use it to do a little bit of protection in terms of your stock investment. Yeah, but of course, you only can do it when you actually have 100 shares. 100 shares. Yeah. Okay. So if you have any questions, just pop it up. Let me know in the chat so that I can actually answer you. Should we buy some BYD? Okay, I think BYD. If I'm not mistaken, right? BYD. I don't trade BYD. I don't trade BYD. But of course, if you look at BYD, if I know who this Warren Buffett is also um, a share owner of this company, right? Okay, you can see that BYD right now is actually trading at $65. Yeah, and it's actually right now way ahead. It was actually trading at 10 somewhere last year, right? Yeah. Okay, let me just do it. BYD. This should be. I think this is the B. No, this is BYD. Is this the company? Boyd Gaming Corporation. I think so. Yeah, is that the company? Let me just check on Yahoo, just to be sure we are looking at the correct stock. BYD. Is this the company? Analysis profile. Let's check. Consumer Silicon. This is a no. This is a gaming company. I think it is actually traded in a different stock. Wani, do you know? I don't. I'm not too familiar with this BYD. I think it is not directly. It's a OTC stock or something, if not mistaken. BYDDY. Okay, let's see. BYDDY. BYDDY. Coming back. BYDDY. Okay. Thank you, Wani. This is the stock. You see, this is OTC stock. This is OTC stock. So of course, OTC stocks. First thing is liquidity. Liquidity would not be that high. Yeah, that high. Okay. I would say I don't have any view with regards to this. I don't even buy any EV stocks, including Tesla. Yeah, but personally, I would not take a trade on this. I mean, you can evaluate on this. I mean, trend wise, you can actually see that the prices is actually quite volatile, quite volatile. And of course, if we just look purely on technicals, right, you can see that at this level it actually forms some level of support when it's actually trading at this line here. Yeah. Yep. And then of course, other than that, I don't have any other view with regards to this. Yeah, probably because it's also, I don't think it's optionable. Is it? I don't think there's actually options for this stock. Is there an option? Trade. I don't think there is an option. BYDD is BYDDY. No options. Yeah. So no options, no trade for me. Yeah, one day you can evaluate this company. Given a choice lah. I mean, I would still go for the big boys like Tesla if you actually want to go long term. And Chinese companies sometimes you can see that the volatility, it would actually be quite high depending on which time you actually go in. You might be getting in on, on at the wrong time, and suddenly it comes down. So I would not personally on my side. Yeah. Okay, hope I have not scared you away. Okay, so yeah, so this is that. If you have any other things, maybe we can also see. Let's see, we have just a bit more time. Today we started later, I mean, because traffic is actually quite bad these days during the Puasa months, right? During Puasa months, yeah. UNH, yeah, UNH is has been actually coming back, going back up. Yeah, in fact, UNH, I also took off my positions already when it was actually at 520. Yeah, 520. I took off the my position, long positions on this UNH. Yeah, that's why I mean, like what the title of the show today, right? Sell, uh, what is that? Sell and may go away, right? Yeah. So I mean, to a certain extent, I am trimming some of my long positions. I'm trimming some of my long positions, and of course, based on what happens in post May, right? Post this earnings season, right? Then possibly if there's a chance to actually go back in the market, if things retraces, then it's actually good for me. But if things continue to be bullish, then it's also fine for me, because I can actually move, take some, realize some of the gains which I've actually made over the past first quarter. Yeah. Okay, because in trading and also in investing, I mean, some people actually tend to be sticky and hold on very long positions, whether up or down, and of course, sometimes people also tend to go in and out. Yeah, so I tend to be a mixture of both, depending on the stocks. And sometimes if the price levels are a bit toppish, then I would actually uh, do cover calls. And sometimes the positions I exit is also because of the cover calls, which the stocks are actually call away, and not so because I want to sell them. Yeah, so a hedge position can also come out to become a divestment result in the share. Yeah, so it's okay because you can actually go in and out of shares anytime. And we should not be sentimental just because other people are actually holding on to this share. Yeah. Okay. All right. So I think that's what I wanted. Go for spring holiday. Yes, yes, yes. Go for spring holiday. Actually, one of the things which I also wanted to share with you my experience. Yeah. um, when you are actually up, right? When you are actually up, when you are actually up in terms of profits. Say for example, you have actually made say your portfolio 20 or 30% up for the year. Okay, so when you're up 20 to 30% up for the year, actually there is no real reason for you to actually continue to trade as much as you did, let's say, on the first quarter, to actually make this 30% gains. Yeah. uh, because this is already your profit. You can you what you can do is you park aside one part of your profits, and you trade with some balance of the profits you have actually made. Even if you lose that for the next 9 months, right? Yeah. At the end, you will still reserve maybe 10 or 15% as a profit for yourself. Yeah, because at times, right? I mean, during certain years, what has actually happened is that for the first, I think this is really true. Sometime back in 2020, 2021, I think in 2021, is that for the first 9 months, right? Basically, I mean, we have actually made quite a good profit of I think probably about 40 to 50% up, 40 to 50% up. But just the last quarter itself, right? Just the last quarter itself, I mean, I think at that time we actually continued to have really heavy positions, very heavy positions, more than 100 over positions at that point in time. I think when the market suddenly turned, right? When the market suddenly turned, the the it was actually very difficult to unwind the positions of more than 100 over trades. Yeah. And things comes actually quite quickly, and that would actually take a big part of your wipe out a big part of your profits, which you have worked so hard for the for the last 9 months, right? And then suddenly you actually see those things wipe out. Then of course it's actually a bit wasteful. So it's okay if you take profit, take some profit off the table, continue to trade on a smaller scale for the remaining 8 7 or 8 months of the year, for the remaining 7 or 8 months of the year. And of course, if you see really high probability trades, then of course you can actually put in a bigger trade. Other than that, basically, just be consistent. Just be consistent to make smaller bits of profits on a monthly basis. Yeah, on a monthly basis. You don't need to take another a big run of 20 to 30% kind of profits. Yeah, if you just maintain to even take 1% profit a month, then for the remaining 7 or 8 months, then that would add on another 8% to what you have actually made for this first quarter. Yeah. Okay, so that's a little bit of also sharing for this. Yeah. So it's sell in May, go away. Okay, so next week itself, I will continue a bit of traveling. Yeah, so next week we probably won't see each other on this show again, this show. But of course, I will try to continue to engage with you guys in our newsletter. And also, I've been a bit busy lately, but of course, the newsletter, as you can see, we have only touched a bit on market updates, the technical trainings. We have not got the time to actually share a bit more on the technical trainings in terms of options and also trading. Yeah, but anyway, if you have any topics which you are actually not clear, and you actually want to know more about, then you can pop me an email at our email, right? Uh, I'll just put it in. Yeah, you pop an email here, and then possibly if I see the topic or your questions, then I can actually answer them at the next newsletter issue. Yeah, that is also a way that you can actually help us to continue to actually give great contents to you guys. Yeah, because we have been doing this newsletter, I think for this week was actually the 109 issue. Yeah, so 109 issue, then of course there is actually many things to write, but after you have actually gone to 109, right, then you need to actually start to crack the brains, what kind of things I can actually write and share with you guys. Yeah, but if it comes from you, then we can also do this session or the newsletter in another way, that try to actually answer your questions, or try to actually solve what is the difficulties at your end, and we will communicate it through our newsletter. It can also be through Trader Stock. Yeah. So until next week, not next week, the next time we see each other again, have a safe trading week, and see you guys again. Bye bye.